Hey, good afternoon, guys. It's almost 6 p.m. on Saturday, March 2nd, 2019. Hope you are doing well. Had a good week. Just want to make a video, quick wrap up on a couple of things last week, especially late in the week, and then a quick look ahead to next week. So, we had a pretty exciting week, especially, well, I would say the two big highlights was the British pound strength during the week, and also on Friday with the Canadian dollar, with GDP numbers coming in unexpectedly weak, really weighed on the Canadian dollar. It was kind of a bummer for the market because the CAD has been really supported lately, and so I think the market was expecting something good. They didn't get it, and usually that's what happens when there's um, something just really outside of expectations, is when you see news. So I just want to review a couple of things with in regards to that. So with the Canadian dollar, um, let's see here. Um, I don't want to sit here and drag this around here. Um, with the Canadian dollar, uh, we had uh, quarter-on-quarter annualized growth. So the fourth quarter numbers came in at only 0.4 versus 1.2, and the month-over-month number was also weak too. If you look at Forex Factory, the numbers were oops, we're supposed to be in this week. The number also was negative two, negative zero point 0.1, and they were expecting a flat number, but really what the market was really looking at was the quarter-over-quarter number. And so, the Bank of Canada is also going to have their rate decision coming up this week. So that is really weighing on the Canadian, that the Bank of Canada is probably going to back off wanting to hike rates based on some of this numbers. Because the CAD really has been pretty supported, and this was very disappointing. And so I think traders kind of looking ahead to what's the Bank of Canada going to say when they meet next week on Wednesday for their rate decision. So anyways, back to the chart here for a second. So I had several longs. I closed most of them at the end of the day. I got in. This one I got in pretty late. This is the U.S. Canadian. That's why I'm holding it. But I do think from a chart pattern, this is going to continue to go up. So I'm comfortable holding this. And I didn't get into this one right away because there was also U.S. dollar news that came out a little bit later on Friday morning. So I wanted to see. And that actually came out negative, but I don't think the market really cared too much about it. And to me, this whole move down is a correction, all these overlapping waves. So we broke out. So I do think we'll go higher. And so I'm comfortable holding this U.S. Canadian trade that I got into, even though it wasn't a great fill. It's still in profit, and I do think it will continue to go up. But if you can look, the Canadian really got hammered. Just look at any Canadian pair. This is CAD Yen, CAD Swiss. I also had taken a Euro Canadian trade, which I got out right about here. But although I do think this will keep going, but this is the euro, and I think the euro is still fundamentally weak, so I just didn't feel comfortable holding that, but probably could have. But there were good trades to be had. Pound Canadian I took, and I actually took this was when the news came out, and I actually closed this one ahead of the weekend too. But I made some good pips on that. So really, you couldn't go wrong with any CAD trades. As long as you were short the Canadian, you were going to be good. So that's the deal with the Canadian. I think that the other highlight for the week was the British pound. And so with the pound, um, you know, if you look really across any of these, you'll see that the pound really has been doing really well after we broke out of this sideways correction here. We just keep going. Now I have this labeled as a 1, 2, 3, 4, 5, and I do think this will keep going. Now I will say from a fundamental standpoint, so this is an Elliott wave pattern, and let's see here. The wave 1 is about 240 pips. So wave 5, when it finally goes, will probably go up to about the 134.10 area, about where I have this 5 sitting. That's about where that will go. And this does look like a nice correction to the downside. If you look at this on a lower time frame, this looks like a little ABC pattern. So I am expecting that this is going to be a wave 4 and will break out to the upside. So I am looking to enter some of these pound pairs long, heading into the beginning of the week. Pound yen, same thing. We just keep buying these dips. Pound Canadian. Let's see. Pound Canadian is already going up, but I do think it will continue to move up. It looks a lot like all these pound pairs, so I think this is probably in a wave 5, and this will keep going. This is a really pip-rich pair here, so this wave 1 is about 300 pips. Now we've already started moving on this one, so I think we'll probably go up to around the 176.80 zone on this pair. So I'm looking to buy dips on the pound, but let's just talk about the pound. And the thing is with the pound is, and this is a really good article here, is the British pound and Brexit optimism overdone? So you guys, unless you've been living under a rock, for about the last 2 years, the Britain has been deciding how they're going to leave the European Union after their Brexit vote a couple of years ago. And it wasn't looking good for months and months and months. The British pound was under a lot of pressure. There was a lot of volatility. Something would come out in the news, be somewhat positive, and the pound would rally 200 pips, and then somebody, some bank or politician would say something negative about Brexit, and it would fall 200 pips. It was just crazy. And you can go back and look at your pound charts, and you'll see it. But as of lately, the last few weeks at least, the pound has gained some footing because there's some optimism that they are going to come to a deal about how to leave the European Union on a soft note, with a deal in place on how to kind of exit without a hard exit that just like one day it's just, okay, we're out, and the market's not going to like that. And so my feeling is, I think that the first 1 to 2 weeks of March we'll continue to see the British pound supported in terms of the optimism, but be very cautious because if anything comes across the wires from either Prime Minister May or any of the politicians or any real strong rumors that things are not looking good, you can quickly see that rally fade. And so I'm going to be watching it from an Elliott wave standpoint. I'm going to be looking to target these areas, and I'm going to get out no matter what's happening. And I'm just going to sit and watch. But I do think, it will be supported until then. Now, there's going to be a couple of votes around the middle of the month. I'm not going to read all this. Nobody wants to hear that. But the bottom line is, if what ultimately they think is going to happen is there's going to be a vote to extend the Article 50 deadline 2 to 3 months, which is what Prime Minister May wants. And the Article 50 is basically what they have to do to, execute a deal to exit the European Union safely. And so they're going to get a little bit more time. And if that ends up being the case, then I would think the pound will continue to rally. But if for some reason those fail or they don't get a deal of some kind, then watch out. The British pound will fall through the floor again, and it'll just be really bad for the pound. But yeah, so like the last sentence here, expect significant pound weakness on any news which makes a no deal appear more likely. This will be the case if Parliament vote in favor of a hard Brexit on March 13th, but that's not expected to pass. This last vote they're going to take about getting an extension is probably going to be the one that passes. But watch out around March 12th to 13th. I would be very cautious to be in any pound trades at this time. But leading up to that, unless something sentiment-wise comes out negative, I would continue again, at least in the short term, to look for longs in the pound. Okay, but be very cautious come the middle of this month. Okay, that's just my advice. Practice good money management and use stop losses. All right. But there's nothing on the news calendar for the pound this week. It's going to be all about Brexit. That's really all it's been about the last 2 years. Anything that's on these news calendars for the pound is really of no consequence. Okay, it really is all about Brexit. So, all right, so that's it on that. Um, so the rest of the week, there's a lot of stuff going on. The Australian dollar. This is the current week. Okay, so Australian dollar is a lot of news now. Again, the Aussie has been under a lot of pressure lately after a nice run up, and then a couple of weeks ago, the Royal Bank of Australia Governor Lowe came out and kind of jawed it down a little bit, just reducing expectations. The numbers haven't really been great. This, trade issues with China, which is Australia is very reliant on. So they're going to have their rate decision on Monday night. They're not expected to change it. He's either expecting to keep it at 1.5. It's going to be all in the statement, and if they continue to be bearish in their statement, then just continue to look for opportunities to sell the Aussie on rallies. Okay. If they readjust it and they come out more positive, that's going to be unexpected, and the Aussie will strengthen. So I will be watching the statement very closely, and then looking at the charts to kind of decide what these patterns look like. But I'm not going to bother looking at them right now. We have GDP on the Aussie coming out, also important, but again, I think it's going to be in respect to what happens with their rate decision and statement. If they continue to look negative, then and GDP comes out positive, I would probably just look at that as a chance to sell, as an opportunity to get a better fill on a sell. So, but if they readjust their stance and they come out less dovish on these statements, then then I'd be looking to buy, and then the GDP number will be important. So. And again, Wednesday we have the Canadian dollar rate statement. Again, the GDP numbers were not good, so this is going to really set the tone for what they do going forward, and kind of set the fundamental tone for the Canadian dollar. Trade balance coming out a little bit earlier in the morning. Before that, I wouldn't think that's going to really do much. Everybody's going to really be waiting for this. So, even though this is red, so. And then you've got Australian retail sales. Again, it's all going to be on the backs of the fundamentals for their currency in general. I'm not saying this won't be meaningful. It could be, but it's all going to depend on where things sit. But it's another red level news, and it has potential to be an important number. So. Thursday we have the ECB, European Union press conference and rate. Now again, they're not expecting to change the rate, and as usual, it's just going to come down to what's in the statement. And the euro has been fundamentally weak. A lot of the CPI numbers and economic numbers from various European Union countries have suffered, have pulled back, have been lower. Economic growth seems to be sliding, and so I think. If that's the position they take during the press conference, then continue to see the ECB sell off and look for weakness, as I think that's probably what's going to happen. And then on Friday, again, Canadian employment news, along with non-farm payroll in the U.S. coming out at the same time. This is always a whirlwind of stuff. I find that this Canadian news tends to be very volatile, this employment numbers in general. So I tend to be out of all CAD trades heading into this news, because you see a lot of whipsawing. Let it come out, and especially if there's no clear direction in the numbers, and kind of see where it settles in, and don't be lured into any initial move, because a lot of times you'll find it quickly reverse and go the other way. So, but again, this is all going to come off what the Bank of Canada says earlier in the week about the direction of their economy. And this is either going to feed into it, or will provide an opportunity to get a better fill. So on an opposite position. So, and then non-farm payroll always has the opportunity to be market moving, but it really depends. The expectations are not filled in here yet, so we'll have to see. But certainly something to keep an eye on. So remember, guys, I'm talking about fundamentals in these news releases. I mean, you use these in conjunction with your technicals. Okay, I've said in many videos that I think it's really important to know the basic fundamentals of what's coming up and why, because that's ultimately what moves markets, not technical patterns. Technical patterns are the kind of the manifestation of the news, but that's not what moves it. These events and stuff with Brexit and things like that is what moves it. So, when I talk about the British pound, for instance, I know what's going on with Brexit, about possible issues. But at the same time, I'm looking at these patterns and I'm saying, okay, well, I'm looking for buys, but I also know that if this is a wave five here, I don't care what the Brexit stuff is, I'm going to get out here because this is, usually a pretty reliable indicator. And it's kind of sometimes can be a self-fulfilling prophecy. So use the fundamentals, kind of know what's coming out, and then just use it with your technical uh, system, whatever you're using. Combine the two and decide, okay, well, you know, either for forecasting or for targeting, to say, this is what I think is going to happen. Let the news come out, let the market get its direction, and then use your technicals to figure out, entries and exits and stop losses, things like that. So, all right, just don't ignore either one of them. And the last thing is, I showed this in my last video, and again, this is retail trader positions. Happens to be on MyFX book. Here's the website. You guys can just type this in exactly, myfxbook.com/community/outlook. It'll bring you right to this chart. It updates. It's free. You don't need to log in or even have an FX book account to look at this. And this basically culls all their positions together for anybody that's got live accounts on MyFX book. They're basically pulling all this out of here. And so again, I'm not going to rehash that whole video, but what I look for are extremes. So here's the US yen. Their traders are 95% short, 5% long. So I look at anything over 70-30 split to be an extreme. Okay. So euro dollar, I wouldn't, this is pretty much split 50-50. And if you look at the chart, it kind of shows that too. But US yen, being heavily net short, if I look at the yen and I look at the dollar fundamentals, I say I think it's positive. And I look at this with the traders heavily net short, that only confirms what I'm saying. And I'm definitely going to be looking for longs because, again, 95% of these people are wrong, right? So you look at what happened with the pound all week with it rallying, but yet the market remains 87% short on the pound yen. Look at the U.S. Canadian on Friday and what happened. Yet the market was 90% short. So these traders are all on the wrong side. The Kiwi, the Australian dollar has been weak. Yet traders are very heavily net long the Australian Kiwi, the odd Kiwi and the odd dollar. Odd yen's more 50-50, but again, odd Canadian, not an extreme, but again, still pretty heavily net long. So, wrong. And then the euro is pretty much 50 except for euro pound, but this is because of the pound. And again, they're on the wrong side. So, all right. So don't take trades based on just these numbers. But again, if you look at your sentiment, you look at your patterns, and then you come over to here and you say, geez, all these traders are like, way heavily net, long or short, the opposite of what I think. That's probably a pretty good indicator that you're right, because this is the crowd, and the crowd is usually wrong, right? Pound Swiss, 80% short, yet we've continued to see the pound rally. And I just talked about it a few minutes ago. So pound Aussie, look at this, 91% short. Why would you be 91% short the pound odd when the pound has been fundamentally strong and the odd has been fundamentally weak lately? It just doesn't make any sense, right? So odd Swiss, same thing. So all right, guys, so just keep these in mind. All right, I'm not saying take trades based on this, but you should be looking at this and just use this as kind of confirmations, especially if you see an extreme position. And some of these that are at extremes are good trades to look at because they're probably trending or they're about to start trending. So take a look at these. Whereas the ones that are kind of 50-50 in the middle are probably just not doing a lot. Maybe they're moving sideways. They're just not really very good. So yeah, maybe you just pass those by. So anyway, so that's it, guys. I just kind of covered everything. I covered sentiment, I covered fundamentals and news, and I covered chart patterns, particularly for the pound. But there's a lot coming up this week, so I hope you guys make some good pips and be cautious. Again, practice good money management. Use stop losses, but put them in the right place. And just be smart and keep an eye on all this stuff. And so best of luck to you. Have a great week. I hope you like the video. Please like it, share it, uh, subscribe to the channel if you're just finding it. But leave comments, do whatever. Just help spread the word a little bit. And I don't make a lot of videos, but I'm willing to do more if I get asked. But I just haven't been doing it. So, all right, guys. So that's it. I will talk to you all soon. Again, have a great week coming up. Thanks.